Hey guys, what's good? I'm Andre and today I want to have a look at the stock markets in general, just overall indices, and just try to have a brief outlook to next week. Try to figure out if we're in for a correction further or if we can expect the markets to recover. Guys, before we jump in, I'm gonna plant 100 trees as soon as our very young channel here reaches 500 subscribers. Help me out and we're gonna help the planet out as well. So let's jump right in and have a look at what to expect here. Now guys, I do want to lead by saying that everything I will tell you in the next few minutes here is going to be hinging on not having any sort of major cataclysm happening in the next few days. Obviously, like if the aliens invade us, if Russia attacks Ukraine, if COVID has the 15th variant that will wipe us out, this will all go to shit, but hopefully none of those will happen, fingers crossed. So let's have a look at what the markets have been doing for the past year, or actually for the past few years, and then we can try to make some sense out of the madness. So guys, the very first thing I would like you to have a look at is that ever since the COVID outbreak, we've been lucky enough to have this pretty healthy support line over here, the yellow one that has kept the market at bay and has given us a pretty strong trend to base our trades off of. Now, the second thing I would like you to drive your attention towards is that we have had so many instances of W-shaped recoveries in the past few months to a couple of years here. So if you guys have a look, we have had so many W's. Almost every single time we had a market correction, whether bigger or smaller, there has been a W-shaped recovery coming right after those. Actually, this was more of a V-shaped here, although I think you can still make the argument of that very small W shape over there, and it just happened so many times, guys. So with that in mind, that we're gonna see exactly the same thing here as well, with this potential new correction from this week heading towards future higher highs. Potentially, maybe. We definitely know that the trend is your friend, so as frequently as possible, trends do happen again and again and again in the stock market. And the thing is that if we look at the S&P, we see exactly the same thing, which is again pretty encouraging to see. So the fact that we can see this in both markets is pretty encouraging as well, and I think that we are potentially at the bottom here, maybe not at the exact bottom, but the markets are starting to bottom out. Now, another indicator that I frequently have a look at and try to guesstimate whenever the markets approach a bottom is the VIX, guys. Every single time a VIX peaks over here and then starts cooling down, it means that we are nearing the market bottom, and then you can see it spike again, a smaller spike, and this is usually when it forms that W shape that we were talking about. So guys, with that in mind, the VIX spiked last week. We have seen it correct quite a bit. It did have a sort of a bounce, a dead cat bounce last week, and hopefully we will continue seeing it correct to the downside here and leave us alone, for lack of better term. So I do believe that moving forward, at least the Nasdaq and the S&P are hopefully going to look for more gains. Now, with both of them, I think the greatest thing that you need to have a look at is where exactly can we actually expect the market to stop being in this sort of correction territory. And the level that I'd be looking at, guys, roughly, of course, nobody's here to try to predict the future, but let's have a clear look at sort of this point. With the markets moving towards that, it's gonna be the new resistance, right? So we will need a considerable amount of pricing power to be able to break the resistance that has now formed and continue higher to potential higher highs again. The one market, guys, that I'm less bullish about is the Russell 2000. Now, the Russell has traded sideways for the majority of last year. That hasn't been ideal at all, and what we can see is that it now established a bottom here, hopefully. The one thing that's interesting for us all to see is the fact that the Russell is currently, or has hit bear market. Currently, actually, it managed to escape the bear market correction territory. So the challenge here is gonna be to see if we're gonna start making higher highs, or if this is just a lower high until we start making lower lows. Now this is gonna be extremely important, guys, and honestly if we break this resistance over here, it's gonna be pretty grim, because we can potentially expect to have this next level of support over here, which is going to basically mean the fact that overall the Russell would have corrected roughly 32%. I think that would be quite severe and we would be seeing a lot of blood on the street. So guys, with all this said, what are we hopefully looking for here in the next few weeks? I think that the markets are going to continue the recovery. I think that we're going to move into a better place. Most of the blue chips have already reported earnings and we have seen really strong numbers and then some sort of tamed guidance for the next quarter. So I think everything is at this point priced in. We have seen the way that Facebook took the market down, Amazon took it up, and then at the back end of that, Google managed to pick it up again. So hopefully we are in for more of the same, more of the wins. We are expecting still earnings for a couple of really important companies, like Alibaba would be a really interesting one to have eyes on, and obviously some of the more exciting growth stocks like PLTR are reporting earnings this week as well. So that's also gonna be pretty interesting and pretty exciting for us all to look at. Now, the last thing I would like to leave you guys with would be just a usual estimate for how long the QQQ is usually bearish until it regains its bullish momentum. So guys, if we have a look here, ever since we broke the EMA, which is this thin blue line, let me actually highlight that for you so that you can see it. If you see this thin blue line over here, we have managed to break that over here. I believe it was on the 4th of January. And ever since then, we only for a couple of days were above it until breaking below it again. We are still actively below it right now, guys. So that's making a total 31 days of being below the EMA, making lower lows and lower highs. Now, if we go to when sort of the last more major correction happened, when we came closer to or under the 300-day moving average, the way we have right now, obviously that was the COVID outbreak. And if we have a look here, we were under the EMA for just 32 days. So I think that also is a pretty interesting, pretty bullish reason for us all to think that we are now at the back end of the worst of it. Again, barring any real life-changing sort of events, Russia attacking, who knows what else can happen throughout the world, guys. Any cataclysmic type events, those will always be unpredictable and will always massively move the markets. For those cases, don't forget to hedge your account. Don't forget to utilize the VIX whenever needed to make sure that you play off of the volatility. So yeah, guys, hopefully the video has been helpful for you all. Please subscribe if it was, and let me know if you have any questions. I'll catch you next time. Take care.